Hello and welcome to Money Minutes. I'm Kayzad Adajania. Motilal Oswal Asset Management Company is one of India's smallest mutual fund houses with assets of about 500 crore rupees or so. Now, this fund house was launched barely 3 years ago, and ever since the fund house was launched, it is focused mainly on the equity fund space and specifically on exchange traded funds. The fund house in the past 3 years or so has avoided launching debt funds and also fixed maturity plans that were a rage in the last year or so. I caught up with its Chief Executive Officer Aashish Somaiyaa, and I asked him what his fund house's strategy was, and this is what he had to say.
In terms of the reason for being focused on equity, like I mentioned to you that we want to build an equity house which is recognized for equity management or equity expertise. I think because as a house, Motilal Oswal, since 1987, if you've seen the kind of journey or the history, then we've always believed in sticking to our competency. So our belief is that instead of offering whatever the market is broadly willing to buy, what we should do is we should offer what we are good at or what we believe we are good at. So it's basically just this thought process that one should play to strengths. One should always give out in the market what one is confident and good at manufacturing. And plus, since 27 years now we've been equity focused. In some sense, I can say we've been living equities for 27 years. So we believe that's our forte. So we would like to stick to that. So net, what I have realized is that an investor requires a variety of a plethora of products, and basically an investor needs all asset products and he needs a proper asset allocation on the investment side. Now if I step back as to what do I offer, so what does the investor need and what am I offering? What I am offering is equity mutual funds, and there are 44 AMCs. So within the investor's asset allocation, mutual fund is one piece. Within mutual funds, equity mutual funds is a piece. And within a host or a plethora of players, I am one of them. So my sense is that at any point in time, out of an investor's asset allocation, I am addressing anywhere between 5% to 20%. At the same time, there are a lot of individual IFAs who also operate as platforms. I mean, they are entrepreneurs who are chartered accountants or CFPs themselves, and they have their own operational setup and they have tie-ups with a variety of manufacturers. So net, what we focus on is select IFAs who are entrepreneurs themselves, and then platforms. Within platforms, there are clearly two types. Either they are wealth managers or they are broker dealers. So net, I think we try to focus on platforms and give a very clearly defined good proposition to these platforms. The other important point also, reason for banking on these platforms emerges also because I personally believe that mutual funds are a prescription drug. I mean, if I were to compare with the pharma industry, my sense is that investors may not always be able to identify how to build that asset allocation and what all to populate it with. So there is always going to be a need for a distributor or an advisor, whichever way you look at it. And from that perspective, that's why I said that mutual funds are a prescription product. It's not meant to be an over-the-counter product in that sense. And that's the second reason why I think we should align with platforms. So that's the brief response.